good morning. You've tuned into ET Now, and this is Buy Now, Sell Now with me, Cheryl D'Souza. Along with me, I have Shrishti Sharma. Very good morning to you, Shrishti. And it's been a good day coming back from a long weekend, at least for the markets. If you look at it, we've actually started on a very firm footing. You had the SGX Nifty that was indicating about 80, it was trading above the 18,200 mark. Nevertheless, nothing to be disappointed about when you see 18,100 on the screens for the Nifty. So 0.5% uptick coming in for the benchmark indices as we speak, and Nifty Bank also is moving in tandem with the benchmark indices. You have Nifty Bank that has surpassed the levels of around 43,400 mark as we speak. Talking about the list of gainers then, as of now, you have Tech Mahindra, ONGC as well as UPL that is ruling the charts. Add to the list two metal names as Hindalco as well as JSW Steel. They are among the top gainers coming in on the Nifty as of this point in time. But talking about the losers, you have Hero MotoCorp, top loser as we speak, 2.4% downtick coming in for Hero MotoCorp, followed by Kotak Mahindra Bank, which is reacting to its earnings. You have Tata Motors also that is seeing some sort of a downtick, as well as Ultratech Cements and Adani Ports are the other set of losers at this point in time. If you look at the advance decline ratio for now, is definitely tilted in the favor of the advances. We just initial hours of the trading session, so let's see how the entire day pans out. Let me take you through the sectoral indices and what they're doing at this point in time. If you look at the sectoral indices, except Pharma Index, which is now actually nudging towards the negative territory, just all the sectoral indices are in the positive territory. There you go on your screen, Nifty Pharma Index at the day's lowest point. But on the top, on the gaining side is the IT Index. That's the top sectoral gainer, 1.6% uptick coming for IT Index. Power Index is trading high by about 1.2%. Also, you have oil and gas, PST sectors, all of them seeing good strength. Along with that, your broader markets is outperforming at this point in time, with the mid-cap index seeing gains of about 19% as we speak. But before we proceed and we bring on board our guests for today, we also have a couple of managements joining us on the show to talk about the performance in the quarter gone by. Shristi, let's talk about what is happening with Atul Auto. That particular counter is under pressure in today's trading session.
Well, yes, absolutely, Cheryl. That particular counter is in focus and all eyes on Atul Auto. And not just Atul Auto, if you look at the sales for whole of EVs for the month of April, like we have been highlighting, so there has been a norm change related to the reporting standards as well as for the battery packs. There was a safety norm that was there with a deadline of 31st March, and the name is AIS 156. When these norms got implemented, the companies had to be compliant with that. And for the first half of the April month, companies could not produce their EVs on a full basis. Similar for the likes of Atul Auto as well as TVS Motors. If you see at the numbers for Atul Auto this time around, there has been a sharp decline in the sales data, wherein the month-on-month sales, which is not a great comparable, but the sales are down 77%, and on a YOY basis, the sales are down 55%. So that's the reason why the EV sales were not that great for the month of April. And similar is the like for TVS Motors, where from 15,000 of numbers on a month-on-month basis, if we see the sequential decline has now come to 6,000 of units. So the EV sales were not good on the back of being compliant with this new norm.
All right, so that's one of the reasons why Atul Auto is actually declining in today's trading session. But let's understand what should you do to make sure that your wealth is protected, and also how should you trade in this particular market. Let me bring on board our guests for today. We have Kunal Bothra as well as Ashish Maheshwari joining us on the show. Very good morning to you, Kunal, as well as Ashish. Thank you so much for joining us. And Ashish, let me come to you before we kickstart with taking all the queries and also talking about earnings. What should retail investors do to make sure that their wealth is protected in such a market scenario? We've seen Nifty now cross 18,100.
Yes, so there's a new movie release called PS2. So my P is here profit. So whatever the profit traders get in intraday positions, they should try to take profit home instead of just waiting or making those investments. And S is stop loss. So whatever trades you do for take intraday, etc., always keep a stop loss, because you are playing for very short term horizon. So without a stop loss, the chances of losing are more. So this is my PS2 tips for retail investors.
All right, so that's the take coming in from Ashish, talking about the PS2, the latest movie, and also your strategy based on that one. But Kunal, talking about the markets at this point in time, 18,100 is what we surpassed, a month ago or so. We didn't think that this would be here so easily, isn't it?
I think yeah. I think in times of extreme pessimism, you're bound to be looking at the very myopic kind of a view, looking at near-term challenges for the indices as well as for the overall economy and the globe. But I think it's a good comeback for the index in the previous month, the month of April specifically. We are just building on to the the hard work the markets have done in the last one odd month, scaling up more than 1,000 plus points on the Nifty from 16,800 levels. I think now we could be at a cusp of a breakout, possibly about the 18,200 mark. Maybe we may go into a couple of days of consolidation, but I think once the breakout happens about the 18,200 levels, we can just add on to the kind of momentum which you've seen for the markets in the last 1 month. So good comeback. Hopefully it will sustain and even build from current levels.
All right, so that's the outlook coming in for markets from Kunal, saying we can actually wait for 18,200. Hopefully, we should be able to see that one on the charts. But before that, we may see some sort of consolidatory phase coming in or entering into the markets. But let's talk about some more sectors in particular. And Ashish, let me divert your attention to the auto sector then. Yes, auto sales are trickling in. You saw Atul Auto that is under pressure on back of change in norms as well. But otherwise, what's your outlook for the auto sector going by what they've posted in the month of April?
Yeah, I think so far the numbers are satisfactory, and here my top picks remain, in fact, Bajaj Auto. In my view, this is a company which has done a lot of transformation from export-oriented focus towards domestic business. And another trigger is again their new product launches, their Triumph tie-up, and their 125cc bike, which is doing pretty well. So, in my view, Bajaj Auto is a stock which will get re-rated. My target for this stock will be 4,800 mark in short term. Along with, I also like Eicher Motors in this sector.
All right, so that's the take coming in the auto pack. But let's talk about earnings. And eMudhra came out with its quarterly earnings. And if you look at the profit as well as the total income has seen a very healthy uptick on a year-on-year basis. The PAT has seen an uptick of about 46%, coming in at around 15.8 crore rupees. If you look at the EBITDA margin, however, on a year-on-year basis, there's some sort of a small decline. 32.8% is the EBITDA margin for the year, for the quarter gone by versus 40.6% on a year-on-year basis. You've seen a healthy uptick, however, in the EBITDA levels as well, 26 crore rupees versus 18.5 crore rupees. Let me bring on board the management of eMudhra. We have Mr. Venkataraman Srinivasan, who is the Executive Chairman and eMudhra, joining us on the show. A very good morning to you, sir. Thank you so much for joining us on ET now and to talk about the quarter gone by as well as the road ahead for your particular company. If you look at the margins, yes, in Q4 on a year-on-year basis, you definitely have seen a decline in your margin levels. But if you look at the full year basis, on an FY23 basis, your margins have been able to sustain versus FY22. Could you talk to us what exactly took place in your margins? What is a normalized level that you expect for the margins going ahead, and what would be the key drivers for it?
Yeah, the margin depends on predominantly we are in the cyber security and digital transformation business. And there are 2-3 elements to it. One element is the trust services business where we issue the digital certificates and to some extent the tokens. And the second is the enterprise solution business where we sell the software and also wherever required some hardware, the cryptographic modules and all that we supply, HSM and like that. So the margin depends on the component of software versus hardware. So a little bit when the hardware increases, then the margin a little bit comes down. And then as we move from almost from 130 crore, we move to 180 crore, from 180 crore to almost 250 crore. When we are going like this, we have to take more and more of system integration, more larger projects. In the larger projects, the component of hardware is also slightly higher. So that's where little bit it is going down, but it is not going down very high. And one more factor in the margin is as we are expanding globally. For example, if you take this year, our international growth has been almost maybe 80 to 90% growth internationally compared to domestic growth may be lower. So we need to appoint a number of people abroad. So we have created a branch in Saudi Arabia, a branch in Qatar. We are creating a subsidiary company in Kenya. Then we have appointed few people in the USA and all that. So these are all in those international jurisdictions, the cost of people are also higher. So all these lead to some slight reduction in margin, but that's also compensated well by the increase in top line. And we feel that the currently For the year as a whole, our PAT margin has been 24%. So we feel that maybe around 24% to 22 to 24% margin can easily be maintained in spite of, though our top line growth will be good because we are going more into international market where we need to employ little costlier people. Still, this level of margin can be maintained. That's what we feel.
Hi, very good morning, Mr. Srinivasan. This is Shrishti joining in. Talk to us about your exposure of your revenue from the global clients. What is your revenue from the global clients versus the domestic clients? And adding to that, are you seeing a tempered slowdown in the global orders?
No, global order for us, it is not slowing down. For example, last year we had our global international growth was more than 80% compared to domestic growth in the enterprise business of about 58%. And in the trust services business domestically, there was almost no growth. So that way global growth is good. We are in a very niche area of business, which is the cyber security and digital transformation, which is the need of the hour. Cyber security definitely need of the hour. And more orders are coming. And the paperless transformation, again, it's a cost reduction program. So for saving cost and for customer convenience, it needs to be done. So from that perspective, it is really growing well for us.
Right. Could you talk to us about the new products that are in the pipeline? Also, if you could share with us some of the timelines that we can expect for them to go live. And I know you did touch upon your FY24 revenue, but if you could reiterate it for the benefit of the viewers.
Yeah, first I'll talk about the new product. So as part of our IPO, we conceptualized 3 new products. One is the certificate lifecycle management, which is EM Discovery. Then the remote signing product, then the IoT product. The certificate lifecycle management, there is a global need for it. And so we first started doing that. So that product is completed and we have got a very big customer in India. One of the largest banks in India has become our first customer for the product. And there is also a lot of demand from other public sector banks as well as private sector banks because there is a new guideline from the Reserve Bank on this certificate discovery product. Then the second product is the remote signing. The remote signing product also beta version we have already implemented, and a lot of customers, almost 15-20 customers, are now signing through our remote signing software. So still little bit it has to be refined more, which will be done maybe in another 2 to 3 months time. And the third is the IoT certificate. In the IoT certificate also the product is the development is going on, and mostly before September that product also will be implemented. And then with more and more smart cities coming in India and also more and more the connected vehicle, electric vehicle, connected infrastructure, everything is having the certificate, digital certificate. The demand for the IoT product also will increase. So this is where it is. Then coming to the next year, what we are hoping, though I would not say it's a guideline, we are definitely, and though our base has also considerably increased over the last 2 years, I am very hopeful of at least maybe doing around 25 to 30% growth in the coming year.
Mr. Srinivasan, our last question to you. What are the key people challenges you have faced over the last 2 years, and what are you seeing on ground now?
The people challenges, one is the senior most level and the mid level. The senior and mid level, we are very stable. So almost all the people who are in the senior mid level are staying with us, and they have got good stock options also. So, but in the lower level, the challenge is very high. So the people are joining and leaving and all that. And the last year, if you see I think the employee turnover may be almost 30% or little more at the lower level. But because the senior mid level is very stable and very good training program, we are able to overcome the challenges of the junior people leaving and then joining and all that. So we have a number of training programs by which quickly we can impart the knowledge and then go ahead with inducting the people.
All right, we leave it there then, Mr. Srinivasan. Thank you so much for joining us on ET Now to talk about the quarter gone by for eMudhra. Also, what was the road ahead coming in for your company? And that was Mr. Venkataraman Srinivasan, who is the Executive Chairman at eMudhra. But on that note, we'll actually slip into a break on this edition of Buy Now Sell Now. When we come back, we will be joined by another management, and then we'll start taking all of the stock-related queries. So viewers, don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and let's take a look at some of the companies that have already come out with their earnings. Let's talk about the companies which are reacting on the back of good set of numbers. Take a look at Mahindra Financial. That one is actually seeing a good uptick. Along with that, add to that list IDFC First Bank, Saturn Credit Care. That one is actually seeing a sharp up move in today's trading session on back of good and strong quarterly earnings. On the back of weak earnings, you can see a decline coming on MRPL. Also, you have Atul Auto that is seeing a price volume breakdown as well in today's trading session. Add to that list, even RBL Bank is under pressure on back of its earning. There you go. Atul Limited is the counter, not Atul Auto. On back of earnings that is reacting. Let's talk about textile counters, and they are a buzz in today's trading session. You have Shoppers Stop, Trent, also you have TCNS Clothing that is seeing good healthy uptick in today's trading session. You have also Welspun India that is seeing a good up move. We spoke to the management just before we could hit that long weekend, and a positive outlook coming in from Welspun India management as well. And the stock is anyways perched at a 52-week high in today's trading session. RVNL, we had the management earlier on in the show as well, and the stock is a buzz in today's trading session. It was locked in the upper circle of about 10%, hitting a fresh 52-week high as well. Add to that list REC as well. But these are not the only counters that are reacting on back of earnings, isn't it, Shrishti?
Well, yes, absolutely. On the back of the earnings, let's shift focus to Chennai Petro. This particular company came out with its numbers last week, and so we are seeing some bit of a profit booking right now. But just after the numbers, we also saw a great uptick in the numbers coming in, because this time around, if you look at the numbers, then there has been a substantial uptick where the net profit saw a jump of 7 times on a quarter-on-quarter basis. Net profit going above that 1,000 mark. Other than that, revenue saw an uptick of 12%. EBITDA up almost 4 times. So let's connect with the management and understand what's the outlook ahead on the numbers going ahead. We have Arvind Kumar, MD, joining us onto the show right now. Hi, a very good morning. In Q4, it is pretty much clear that the higher GRMs aided your numbers. But the question is, what led to the stronger GRMs in Q4 FY23?
See, fourth quarter GRM, we have utilized the capacity actually. So the capacity of the refinery per se, in our overall scenario, if I talk about, it is 10.5. We have gone up to 11.3. That is the highest ever capacity utilization. Similarly, per month, if you talk about the March scenario, we have gone with around more than 1,000 TMT per month capacity utilization for the refinery. So these are the factors, once you utilize the capacity, you will produce more products, and supported by the good cracks and controlling the input cost, we can give more GRM. So GRM becomes high. It is around, I think, 1,004 crores if you talk about, as compared to around 990 crores with the quarter-to-quarter comparison.
Right. Good morning, Mr. Kumar. This is Cheryl also joining in the conversation. You spoke about GRMs, but are the higher GRMs sustainable going ahead? Because if you see in Q1, Singapore GRMs have already been trending lower, and the diesel product cracks are at an 18-month low.
You are right. See, this is a high volatility market. When the crude prices, the last year, it started from around $100 per barrel. It has gone to around 139, came back sharply to 114, then to 90, and now hovering around 78. So this is the situation. The pandemic scenarios are also there. The demand is robust in India, and I hope that demand will be there. So with the demand going, and demand is remains high, then we can say that we can utilize the capacity, and the GRM can sustain. But definitely the cracks are not so good right now, and we have to concentrate and focus on our operational efficiencies and physical performance to maintain the crack or to sustain the crack, not at that high level, but at least around $6 to $8 per barrel in the normal terms, and we will keep the target around $10 per barrel.
Okay, Mr. Kumar, if you could give us an idea at what levels are GRMs trending for Chennai Petro, and what is the break-even GRM for the company?
See, break-even GRM of the company depends on various factors. If I am utilizing, see, nowadays, the India is utilizing the Russian crude, and that too, CPCL is also utilizing the Russian crude. We have utilized around 13% of the Russian crude last year. And in the month of September, I think that it was the maximum utilization around 25%. So with the cheaper crude and the diversifying the crude basket, we can control the input cost. And coming to the operational efficiency, if we can reduce the operating cost as well, then we can sustain even when the cracks are not so.
Of the total crude purchases, if you could tell us what's the percentage of purchase that were from Russia, because we believe that the Russian crude is definitely coming at a discount.
Yeah, I can say you that, see, we were earlier importing crude from Gulf around 70%, 72%, and the spot purchase was around 15 to 20%. That was some of the spot purchases were also included in the Gulf side. And this time, last year, we have taken around 60% of the Gulf and around 13% of the Russian crude, and balance roughly some of the spot crudes from the West African crudes, and some of the crudes we have taken on the Indian origin, the Mumbai High and Narimanan and Rava crude also, which is required for our the wax production, because ours is a very complex refinery producing not only the petroleum products but also the lubes and wax as well.
Okay, Mr. Kumar, in FY23, your cash flow stood at 5,700 crores, which is much higher than FY22. Now, owing to this, you were able to reduce your debt to 4,200 crores. And so the question is, can this go further down, and is the remaining amount entirely working capital debt?
See, earlier, as you know, the debt was hovering around 9,000 crores. And because of the good performance, physical versus and as well as the financial, we could generate the more cash, and the long pending the borrowings we could repay, and we have brought it to the reasonable level, and the interest portion also we have now reducing. So it will also help us in putting the more profitability in the coming years. We'll try that the debt portion doesn't go high. And in case in some of the scenarios in the project cost or Capex or something, so it goes high also. With the good profitability and the good, the productivity, we can control it. But our endeavor should be to keep the debt equity ratio, that you also know that it is hovering around now. It is 0.67. And earlier it was, last year it was around more than 3. So we will keep the debt equity ratio to around 0.5 to 0.6%.
If you could talk to us about what kind of Capex you've planned for the year that we are already in, that's FY24, and how much of this will be going towards Kaveri refinery, and also will this be funded via internal accruals?
See, Capex per se, it is planned next year, it is around 550 crores, and reasonable sum maybe around 300 crores or so. It may be going towards the CBRPL, that is the Kaveri Basin Refinery and Petrochemical Limited, the new refinery cum petrochemical complex coming at Nagapattinam, along with the JV partner is our group company Indian Oil, and strategic partners will be coming later. So around the 550 crores have been planned, and reasonable sum will be going towards the CBR.
Amount that you're looking to have a Capex plan for, but how will you fund this Capex?
Yeah, definitely. It is our equity portion, so we have to generate it to our internal.
Okay, but with this, we'll let you go. Mr. Kumar, thank you so much for joining us today on ET Now and helping with the outlook for the results ahead for Chennai Petro. Okay, that was the management of Chennai Petro. The stock is under pressure, some profit booking taking over. But with this, viewers, it's time once again to slip into a short break. But don't go anywhere. As we come right back, it's time to take all your stock-related queries. So stay tuned. Welcome back to Buy Now Sell Now show, where you get all your stock related queries answered by the experts. Viewers, you can connect with us live on Twitter as well as on the WhatsApp number that will be flashing right on your screen. We're already done with half of the show and a lot many queries coming our way. So let's get started. And the first question that I have is coming from Padma. And Kunal, this question is for you. She's holding two counters. Firstly, Tata Communications from a price of 1250 rupees, and the other one is Trent at a price of 1050 rupees. What to do in both of these counters? Should she sell or rather shift to SBI or Reliance?
I think you should hold on to both of them. Both of them are looking very attractive. Trent is making a comeback. Tata Communications also, I think, is making a decent comeback, looking at the last 4 months of chart pattern specifically. So I think it's a good time where you should look to hold on to these stocks and give it more time for them to perform.
All right, this one is coming in from Vinod. He's writing to us from Dubai, and he's planning to invest for the long term in two stocks. One is Gland Pharma, the other one is Jubilant Ingravia. He wants to know whether it makes a sense to kind of invest in the stock for the longer term. No doubt, Kunal, he's asked for your view, but keeping in mind that he's a long-term investor, I'll take this question to Ashish. Gland Pharma, Jubilant Ingravia, do you think these stocks are good for the longer term at current price?
Yeah, I like Gland Pharma instead of Jubilant Ingravia. In my view, instead of Jubilant Ingravia, you can look for alternatives like Syngene, which is doing much better compared to Jubilant Ingravia. And the kind of robust set of numbers which we saw in this company, it will take a stock to new highs in coming time. So Syngene is all set to get further re-rated, and Glen Pharma for sure you can invest.
That's the advice coming in on Gland Pharma. But moving on to the next query, and the next question is on CSB Bank. Kunal, how are the charts looking like for this one? Because I guess just after the results, it saw some bit of a profit booking. And this particular question is from Purnima. And is this a good time to sell CSB Bank and purchase Kotak Mahindra Bank is the question.
Well, I would suggest that it's a good time to try and book profits on CSB Bank because of the way the stock has performed in the last 1 month, specifically from 220 to I think 290 levels. The stock had hit last week or so, and I think it's a good zone where you can start to look out to book profits. I'm not convinced on Kotak Bank yet, because I would still believe that the stock may take some bit of more time to try and get into that breakout mode. Yes, it's attractive in terms of the buy price from long-term play, but whether momentum has come back into the stock price, that's a bit questionable for Kotak Bank, at least over the near-term chart patterns. I would recommend that go with ICICI Bank even at current levels of 930, because my sense is that the stock is getting into a second round of a breakout mode from current levels. So shifting towards ICICI Bank could be a slight better strategy.
All right, this one is coming from Murthy from Hyderabad, and he wants to know about Electronics Mart holding about 2,000 shares at a price of 76.2 rupees per share. Given the fact that it's a recently listed counter, I'll try and take your view on this one, Ashish. Electronics Mart?
Actually, I'm not that fan of this particular stock. So in my view, you can exit from this particular counter, and it has not given any great return to investor post-listing also. So my suggestion will be to exit.
Okay, moving on. And Ashish, what's your view on Archean Chemicals, one of the recently listed companies? This question is from Rajesh Maheshwari, and he's holding 36 shares from a price of 405, sitting at a decent profit. But what's the medium to long-term outlook on this?
I'm quite bullish as far as now specialty chemical stocks are concerned. And again, this is a good company, given good returns to investor. And like these chemical stocks are, after a long phase of consolidation, have again started moving up. So my suggestion will be to remain invested. We are expecting very good set of numbers from chemical companies this quarter. So remain there.
Kunal, this was coming from Chandra and wants to know about Sumitomo Chemicals, 800 shares at an average price of around 480 rupees per share. Makes sense to stay put with this one or switch to some other chemical stock?
I think it makes sense to stay put as of now. Possible then look to maybe average at the 405, 404 mark. That would probably indicate a double bottom formation on the daily charts for Sumitomo Chemical. So I think it's a good strategy to hold on to the stock, not make a switch at this point of time, and if possible, go for an averaging closer to that 404, 405 mark.
Okay, Ashish, the next question is from Murli, and the question is on Elecon Engineering. He has been holding these shares from a price of 425, but he wants to do an SIP in this particular stock for the next 3 years. So, what's your longer term outlook on this one?
This is again one of my favorite stock if you ask me into engineering space, and I have recommended this stock to for buying also in your previous shows also. Stock is showing some amount of consolidation after quarterly numbers which came last week. But in my view, again, it will start its northward journey very soon because the kind of good numbers companies reporting quarter over quarter, this stock will go to places. So remain invested here. My target in this year for the stock is 600 rupees at least.
Veni, who's a senior citizen writing to us from Hyderabad, wants to buy Poonawalla FinCorp and IDFC First Bank. What's the safe entry price?
I think the safe entry price is already gone, my sense, because I think 290 approximately for Poonawalla FinCorp and I think just about 54, 55 levels for IDFC First Bank. Those are very strong zones of support for these stocks. In fact, both of these stocks have been the names which I've been recommending quite consistently. You can start buying at current levels, but then I think what you need to do is, because the stock prices have moved up higher, you have to reduce your quantity which you're looking to buy. So maybe buy 50% of your expected quantity which you're looking to buy the stock at current levels, and wait out for dips in case if these stocks corrects in the next 1 or 2 months and come back to the points which I've highlighted. Those are points where you can look to rebuy or look to accumulate or add.
Okay, Kunal, what's your take on Bharat Electronics? Thakore wants to know, is this a good time to enter into Bharat Electronics?
So again, a stock which I think closer to 1992 levels was very, very attractive. Now at 104, the risk reward is a bit skewed, because what we are looking out to aim for BEL would be a retest of the previous highs of 110.12, which means an upside of at least another 6 to 8 rupees from current levels. But on the downside, the support for the stock is around 95-96 mark as of now. So the risk reward is a bit skewed 1:1. That's why I would not recommend a buy on BEL at current levels. Wait out for a dip. Maybe if the stock dips towards, say, a nominal 100 rupees from current levels, so if it comes back to 100, for example, then I think the risk reward would be attractive to go for a buy.
Okay, Kunal, one more your way. This one is coming from Ravi Tega from Hyderabad. Entered Bank of Baroda for the short term, holding about 350 shares at an average price of 169 for the last 3 months. Currently, the RSI is above 80, is what he's noting. Is there any further scope for upside in this one, and what time period will it take to reach the same? Is it better for him to exit? And if yes, then at what rate?
I would not suggest an exit. I would suggest a hold. Even if the RSIs are at 80 plus levels, I would still believe that the momentum is quite strong. Look at this not just as a solitary stock, but look at this as the entire sector which is doing exceptionally well. And Bank of Baroda sort of leading the charge for the entire PSU banking name. So I would suggest a hold. My expectation is that possibly in the next 1 to 2 months, we could be looking at a dash towards 196 to 198, which was the previous swing high.
Okay, the next question is from Ghosh Dada, and this one is for you, Ashish. He's holding 3,000 shares of Wipro from a very, very long time, from a price of 440 rupees. Wants to know what is the future, because after the buyback announcement, there was some bit of a bounce in this particular counter. So holding that still makes sense?
Yes, I think you can try to take advantage of this buyback option. Though in long run, I'm not that bullish on Wipro. Even the numbers were also dismal set of the quarterly numbers. But this buyback related announcement made the trick, and the stock is up by almost 30 rupees because of that. But once this event is over, I think again Wipro will consolidate at this level. So for time being, you can take advantage of buyback. Otherwise, I'll advise post buyback is over to exit from this stock and look at some counterparts like HCL Tech or Tech Mahindra, which can give you better returns.
Coming your way on a large cap counter, L&T is the counter's name. Ashish Krishna Kumar has already purchased 775 shares of L&T at a price of around 1,635 odd rupees. He wants to know, does it make sense for him to go ahead, book profits and then buy later on? He has a 3-year horizon for L&T.
Not advised to book profit. In my view, at all falls, this is the stock which is gaining more and more institutional buyers, because the kind of order book They are having almost 2 years of executable order book in hand, so almost 3.7 lakh crores worth of orders they have to execute in the next couple of years. And we should not forget this, next after 1 year we are going to have general election. So in these 2 quarters, you are going to have even more and bigger orders for infrastructure sector, and L&T is going to be major beneficiary. This is the reason I'm not advising this stock to be sold at any price. In 6 months, my target for stock is 2,800 plus.
Okay, moving on to the next question. And Ashish, this question once again for you from Bala. And he wants to know, is Cosmo First as well as Kajaria Ceramics good bet with a medium-term outlook?
Area ceramics more, in my view, like this is again a proxy play for realty sector, and the way construction is happening pan India and redevelopment happening everywhere. This Kajaria will continue to do well. So Kajaria is my pick number one. Cosmo First I like to avoid.
From Bangalore has about 10 shares of BEML purchased at 1420 rupees. Makes sense to average right now?
Yeah, makes sense to average. The stock is back towards the previous support. I think 1200 or 1180 was the previous support in the month of March for BEML. It's very close to that kind of a level over the near term. So I think it makes sense to try and average out at current levels.
Okay, so that's the view coming in on BEML. But with this, viewers, it's time to slip into a short break, but don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now and ET Now. Let me continue taking your queries. This one has come from Sandeep, and he's a long-term investor, has many large caps in his portfolio. Ashish, he has Reliance, ITC, HDFC Bank, Cipla, L&T already in his portfolio. But for the longer term, he's given me a list of names, but I would advise you to talk about only one from that. Natco Pharma, REC, IDFC First Bank. What's the view for the next 4 to 5 years?
Yes, I think Natco Pharma, REC are the pick in my view in this particular pack, which can hold a lot of potential. Again, Natco is a company which has really underperformed in the last couple of years, but now again consolidating and gradually stock has also started moving up. So this is a stock which should be looked at. Another is PFC because of there's good demand of power projects, the funding in power projects. So PFC, REC will even I'm expecting 20% upside in PFC, REC both from these levels. So should not be these stocks should not be missed if you want to add, and if you're already holding, then remain invested.
Okay, moving on to the next question that we have. Ashish, this question is on Chemplast Sanmar, and Pratiksha has bought at a price of 465, currently at a loss, but wants to know, is this a good time to average this particular counter, and what's the outlook for the next 3 to 6 months?
Yes, again, as I was briefing earlier also, that these chemical stocks have almost bottomed out now. And those companies which are fundamentally very strong will gradually start moving up, because again, from the all-time highs, the stocks are available at quite attractive valuation. So you see for Chemplast Sanmar also last 1 month, as per chart, almost 85 rupees stock has gained, but more upside is there. So my suggestion will be, if you have bought at higher price, average this stock at this price, you are going to get very good return in next 6 months, and this quarterly numbers are all again going to be very good for Chemplast Sanmar.
All right, moving on. This one is coming from Ron from Mumbai. Kunal, he wants to know about a long-term shift from Tata Motors to ITC. Over the longer term, if someone wants to make the switch, do you think it's a switch to make from Tata Motors to ITC, or look to just stay put with both of these counters?
Yeah, I think you should look to stay put ideally with both of these counters, but if given the choice, again, it depends on your risk appetite, your profile as such, as well as what horizon as well as capital you are looking out for. But I would believe Tata Motors itself is a strong candidate of a major breakout on the longer term time frame charts. It says that right now the news flow and the events have started to come out positive for the stock price. But I believe both the stocks are very attractive. Difficult to try and pinpoint and choose one out of the two. Tata Motors is something which I have been recommending since last couple of years, and ITC was the recommendation which you had given last year. So I would stand by with both of the recommendations even at current levels.
Okay, Kunal, since you have been tracking Biocon, this question is for you, and the question is from KB Rao. Wants to know, can he buy Biocon today?
Well, you can look to buy at current levels, but again, because the stock has given a breakout today, I would suggest that you keep your position size a bit lower for Biocon. 232, 232 and a half is the breakout for the stock. So whether if you can buy at those levels, it will be great in case the stock corrects. But if you can buy at current levels, then drop your position size marginally a bit.
Okay, Kunal, then one more your way. Neha from Mumbai wants to know about Delta Corp, 2,340 shares that she's purchased at 200 odd levels. Wants to know whether she should look to book profits or stay put with this one.
Yeah, I generally don't fancy recommending Delta Corp because of the way the stock has been moving all over the place. The trends have been very erratic for the stock, but it's just that in the last 1 month there is marginal indication of stability which has come back for Delta Corp. So from 180 levels, the stock has managed to surpass two very crucial resistances. So what ideally you should be doing is keeping a trailing stop loss. Maybe 205 could be a trail stop loss for Delta Corp and hold on to it for say levels of 220 as a near-term target.
Okay, Kunal, Tanush is holding 20 shares of Hero MotoCorp at a price of 2,500. Stock down after a weak April auto sales data, and the results are tomorrow. So wants to know just before that how the chart's building up, and is this a good time to accumulate this counter?
Well, not exactly at current levels, but I think if it corrects, say by another 1% from current zone, so 24.50, 55, for example, for Hero MotoCorp, that could be an attractive zone where you may look to buy or average or go for a contra, opinion on Hero MotoCorp. So I'll wait for at least another 1% correction before I initiate a buy.
All right, let me take this next one, quick one, coming in from Kannan from Chennai. 50 shares of L&T Finance, where he wants to know what should he do with this one. Should he stay put with this or look to exit this one and reinvest the money in some other counter altogether? What's your take on this one, Ashish?
LT Finance is not doing that great compared to other NBFC stocks. So my suggestion will be to exit from this stock and look at Aditya Birla Capital, which is again after a good phase of consolidation again has started moving up. So this is a stock where I'm expecting another 20% of upside. You can expect instead of L&T Finance, which is crawling here for quite some time.
Okay, well, let's move on, and here's a policy news break coming up for you, wherein government is working on a 25-year plan with big reforms in the gas marketing and pipeline infra. ET now has learned from the sources that PNGRB will be made the regulator for pipeline infra for all kinds of energy sources. Prakash Priyadarshy has more details on this one. Take it away, Prakash.
Yeah, sources are informing that the government is planning to make big reforms in gas marketing system along with the pipeline infrastructure. We are given to understand that the Oil Ministry is working on a strategy to prepare future-ready gas marketing system and related infrastructure. The idea behind is to prepare 25 years future plan to meet future requirement when it comes to infrastructure and related gas market system. So related amendments are being done in current PNGRB Act that will include a new source of energy, which means marketing system and pipeline infrastructure will be developed for new source of energy that include CBG, green hydrogen and green ammonia. So that will be brought into the ambit of PNGRB. Apart from that, common carrier operator of all natural gas pipeline will also be brought in under the ambit of PNGRB Act. So transport system operator, that is TSO, will manage all common carrier pipeline in the country, and all pipeline which is common carrier pipeline of GAIL including other companies will be a part of a TSO, and that will be regulated by PNGRB. So the government will own majority stake in TSO as per the initial plan, and PNGRB Act will manage the whole system. Sources are also informing that Oil Ministry has completed consultation with industry on the reform, on the proposed reforms, and interministerial consultation will be completed by end of June this year.
Thank you so much for that, Prakash, for bringing that story to us. But let's continue with taking all of his stock-related queries then. And the next query that I have is coming out from Shankar from Tamil Nadu. Kunal, he has a couple of stocks that he is holding and he's showing good profits in these. It's Ather, IRFC, PFC and Aircon. Out of this, do you think it makes sense that he should book profits or continue to hold on for next 6 months?
I think continue to hold on for next 6 months. Only Ircon could be a stock where, depending on how much profits you've made, you can probably take a call of booking out, at current levels. But I think most of the other stocks, Ather, etc., I think these stocks have looked very attractive on the charts, even though history for some of the stocks in terms of price is a bit limited. But I think I would recommend a hold for at least another couple of quarters.
Okay, moving on, and the next question is on Atul Auto, and Ashish, this question is for you. The question is from Rohit, and he wants to know, how do you see Atul Auto for a long-term investment?
Yes, for a long-term investment is concerned, there's a merit in the stock, though stock has corrected last week and today also because of new norms, etc., and some sales-related issues in the EV. But this is a company which also operates in the CNG based three-wheelers along with EV. So this year they have sold almost 25,000 plus vehicles. So some whatever the guideline related changes are there, I think this is for everyone. So Atul Auto will also comply. But stock has given good return in last 1 to 3 month time frame, and in my view, 320 rupees level will be a good price to once again enter into Atul Auto after this correction. So just keep a watch on the stock price, and on some more fall you can always add on the portfolio. I don't find anything wrong with the stock per se in longer.
All right, moving on then. Let's kickstart with the rapid fire then. And this one has come from Vignesh, is writing to us from Chennai. He wants to know if it's good time to buy Rallis India at a price of 190 rupees per share, Kunal.
Well, I would not suggest to buy the stock at current levels.
Okay, Kunal, L&T bought at 1300. This question is from RK, and what's your target in this one, and should he book profit at this point in time?
Yeah, from a short-term way, short-term I think you can book out profits at current levels of 2,400. But from a long-term investing point of view, I would suggest to hold on.
Okay, this one's from Manish, Bank of from Baroda. He's bought UCO Bank at a price of around 29 rupees per share. It makes sense to hold on for the long term, Ashish.
Yeah, remain invested in Bank of Baroda, Indian Bank. These stocks have continued to do well. Even UCO will, after a good phase of consolidation, do well. So remain invested in these.
Okay. Okay, Kunal, Usha is holding 300 shares of Manappuram Finance from a price of 129 rupees. What's the outlook on this one?
I would strongly recommend a hold.
Okay, this one's from Venkatesan from Coimbatore. 30 shares of Endurance holding for the last 1 year. Kunal, what should he do with this stock? He's already bought it at 1,390 rupees per share.
Look to average in case if the stock dips towards 1250 mark.
Okay, Kunal, Vivek has bought ABFRL from a price of 300 rupees. Wants to know in what time this stock can go back to his buying price.
Well, I think the selling is not yet over for the stock price, at least looking at the charts. My sense is the stock should correct back towards 200 levels. That's where you can look to average.
All right, the next one is coming in from Chandrasekhar and wants to know about Den Network. Is it a buy or an avoid, Ashish?
Avoid, in my view. Nothing great is happening with that.
Okay, Kunal, Mr. Singh is looking for a technical view on Wellspun India. He bought 2,000 shares from a price of 76 rupees.
Good time to book our profits. The indicators seem to be extremely overbought.
Okay, Exaro Tiles, Charm Metallics. Pawan has been holding this from IPO time. Ashish, what should he do? Hold or sell?
Both sell, in my view.
Okay, so that's the advice coming in on Exaro Tiles. But with this, viewers, it's time's up on the rapid fire session as well as on the buy now, sell now. Thank you so much, Kunal and Ashish, for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. But don't go anywhere. Just after this quick break, markets at noon will take the action ahead.